Okay. Well, I am Celia Meyer. I'm with Title Connect Agency. I'm the Director of Business Development for Title Connect. So welcome. I just want to be sure everybody's aware this is not CE. This is just informational Q&A. Please feel free to hop in with any questions you have. Interactive is really great. I'd love people to pipe in if there's anything that's unclear or if there's something that you've had come up that you have questions about. So Jamie, I know you mentioned you were relatively new and just new in as full-time. So I'm not sure, I know some of the names on here I recognize, but I'm not sure exactly how new everybody is on here. But please do not hesitate to ask questions, even if you feel like it's a silly one. I do these just to try to give you kind of an understanding of a basic idea of title and what you're going to be seeing as you're going through the process, whether you're working with buyers or sellers, and just kind of some of the kind of get ahead of this sort of thing, because the title company ends up being a big part of every closing. So the first slide here, I'm not going to read the slides to you. I think probably all of you can read, but I'm going to hit kind of some of the high points here. So title insurance is going to be protecting against loss. So it's going to be protecting against things that have already happened in the past. We're not talking about future things. We're not talking about something like homeowners insurance. So it is going to be past transactions, transfers, anything along those lines. So this is actually, I think, a pretty helpful slide just showing kind of some of the differences between homeowners and title insurance. Because homeowners insurance is something that is required anytime there's a mortgage on the property. But they are covering very different things. So that's a question a lot of times buyers don't understand why they have to get homeowners insurance when the seller pays for title insurance. So they are very different, and that just runs through some of the differences between the two. And I'm happy to send these slides out to everybody once we're done, if that would be helpful. But just some of the high points there. Homeowners insurance, it's covering the things in the home. It's covering potential risk that you might have, if fire, floods, things like that. Whereas title insurance is the title itself. If there's a defect in it, if it wasn't transferred correctly in the past, documents weren't recorded properly, things like that is what your title insurance is for. It's a common question of do I actually need the title insurance? There's going to be a couple of answers to that. If there is a lender involved, the lender is going to require a policy that protects them. Now, that's not going to protect the homeowners. That's a separate policy, and they get issued at the same time, but it is a separate policy. So there's a lot of questions. Typically, it's like, well, there's already that lender policy. Why do I need it also? And the answer to that is because you're not actually protected. Only the lender is when there's the lender's policy in there. However, those policies I mentioned, they do get issued at the same time. So the lender's policy is $100. And you'll see if you've got a buyer that they will pay that $100. And again, that question comes up a lot. It's like, why do I pay that when the seller actually pays for the title policy? And that answer is because there's a lender involved. That cost wouldn't be there if there were no lender. So the buyer does cover that portion of the cost. But those policies get issued at the same time, and they cover the buyer for their total purchase price, and then they cover the lender for the total amount they loaned. All right, the next one here. So this is just a little more into what we just talked about, the things that your title insurance covers, things like liens and encumbrances, someone else saying, oh, this is my property, I'm an heir to this property, my grandfather passed it down to me and it somehow didn't get transferred correctly. Things like that, that's what your title insurance is going to be covering for, to make sure that property does stay your property. Hello, Lisa. Okay, how much does title insurance cost? Now, I don't want to get too in depth in this one because it's not something that you're necessarily going to be actually factoring yourself most of the time, but having an idea of how it's done, I think, is important. It is based off the sale price of the property. So it's going to be the same cost regardless of what title company you're working with, just based off that sale price of the property. And that price is set by the Ohio Department of Insurance. So all title companies across the state would be issuing policies for the same amount based off that price point. But the way that it's actually factored is on a sliding scale. So you've got this chart in front of you, and it says up to $150,000 for the policy amount. So if you've got a $200,000 policy, or sorry, property sale, you would say, okay, $150,000, that's that first tier. That's going to be $5.75 per 1,000, so times 150. And then you would take that second tier and you would say, okay, from 150 to 200, because the property was $200,000, that's another 50 times that $4.50 a piece. And then you would add those two amounts together. So that gives you that actual calculation of it. But that's why you can't just say, oh, title insurance is $4 a thousand. It does change based off your price point.
Can you say that one more time?
Yep. So let's say you have a $200,000 property. So you would say 150, because it's priced per $1,000. So it would be 150 times $5.75. And then you would take the next 50, that 51 up to 200, yep, times it by 450 and add those together.
And then divide it by 1,000.
Well, so yeah, you can either just take the amount and divide it, or you can say, so what I do is I just say 150 times 575 and any part thereof. So if it's 150,500, that's considered 151,000 essentially. But yeah, you would essentially divide your price point by 1,000, and then that's how you do that multiplication. And there is a minimum charge. So let's say it's a piece of land or something, it's $7,000. It's just going to be that $175 flat rate amount there. There is what's called reissue rate. So the reissue is a discount on that policy if the owners have had it for less than 10 years. So they do that because they know that a search has been done more recently on the property and it's been insured recently. So if let's say you purchased the home in 2015, you're going to sell it now, you would get a discount on that policy. It's typically about 30% of the original policy that you would get off of it. But we can always calculate that for you. So it's something to keep in mind. If you can figure out what the original policy amount was and take about a third of that, that's typically will give you about the issue amount.
And it doesn't matter what title company you used.
Nope.
First
nope,
time.
It does not matter what title company you used. They should all honor that because typically they're going to be one of your 5 major underwriters that has issued the policy. They all play nicely together. What you do need in order to get that reissue is either the title insurance policy that was issued, or if you can get one of the numbers pages, the HUD, depending on when it was closed, or more recently, the settlement statement or closing disclosure. Mm-hmm. Those items, the title company just needs to be able to see that there was a purchase amount, and they can at least track down that old policy from the prior company. But doesn't matter if it's a different title company.
Do they actually?
Sorry?
Go ahead.
Okay, sorry. But yeah, so that's something, always keep that in mind. And it's really easy to tell when your buyer or when your sellers purchased the home. If you go on the auditor's website, it'll tell you right then and there when they purchased it last. That at least gives you an idea, but that's something to bring up to them anytime you're working with a seller. Say, hey, you know, when you bought, you know, it was only 7 years ago, we can get you a discount on that policy. Just something to keep in mind for your sellers. Then the next question is who pays for the title insurance policy? That is going to be based upon what contract you're using. So our contract, the Columbus Board of Realtors contract, says in that contract that seller pays for the title insurance policy. And it says specifically what type of policy. It's a homeowner's policy. And I think my next slide here is gonna talk about that a little bit more, but it's a homeowner's policy, which insures the person actually living in the home as their home, and just has more coverage than, let's say, like the lender would have. But so that does call for the sellers to pay for it. However, if you're in different areas of the state, it can change. So if you ever receive a contract written on a different board's contract, or not a board, just maybe something from Staples or something like that, just make sure you're keeping track of that, looking into it really well, and just really aware of who is paying for that title insurance policy. Any questions so far? All right. Okay, so this one's just some of the things that you're going to see when you're going through that closing process. So, how do I get to closing smoothly? This is just some of the things that as you're going along. So a pre-start, that's a preliminary title search. What that is when the search is done on a property, that's going to be done anytime a property is transferring and using title insurance. The search can be started early. So let's say you have a seller and you have signed a listing agreement with them. You could start that search right now. You don't have to wait to be in contract for that. It really just starts the ball rolling early on that search. And lets you know ahead of time if there's anything weird or quirky that you didn't necessarily know was going to be on that property. So one of the things most recently that's been popping up are IRS liens. And we do have to work on getting that payoff. It's typically a 14-day turnaround time before they'll even send any kind of payoff out. So stuff like that takes a really long time to go through. If you're not getting ahead of it, it might delay your closing. So that's something we always recommend doing. It doesn't cost the sellers anything additional. It just gets things started a little bit early. So I always recommend doing that, and it's something you can say to your sellers and say, hey, I recommend we do this just because we'll know ahead of time. We already know exactly what we're looking at here. And it just kind of gets you ahead of the game there. So that's the pre-start. So then it goes into contract. Once it goes into contract, you then typically the listing agent would go ahead and send that on to the title company handling title. Each title company might be a little bit different in this. What we at Title Connect ask for is we ask you to send the contract and then just your seller's contact and whoever the buyer agent is. And then we start reaching out to all the parties. Other title companies are maybe going to have a little bit different strategy, but same sort of information will be needed, so they can start reaching out to everybody as well. The title commitment, and we're actually going to go a little bit deeper into the title commitment here in a minute. But the title commitment then, actually I might go back to my slide because that might make it a little easier. So the title, I'm gonna hop around here a little bit. So the title commitment is going to be, it is actually, so if it's similar to title commitments for other insurance policies. So let's say when you have a policy on your car, you get a title commitment from the insurer that's saying, hey, we're going to insure you. We've already looked into your information and we are going to insure you. But then you get the actual policy in the mail later. It gets written specifically for you and your situation. Title commitment in our world is going to be the same thing. It's saying this is everything that needs to be cleared off in order for the buyers to purchase this home free and clear of any liens, judgments, defects, encumbrances, anything like that. So that's what the title commitment is. I'm going to hop back to where I was because there was another point. So why the title commitment is especially important to us in real estate, though, is in your contract, the Columbus Board of Realtors contract, there's a clause that says the title commitment is required to be sent from the seller to the buyer 15 days prior to closing. And if that isn't done, the buyer can use that as no longer being in contract. Should they wish to get out of the contract, they could say, well, you didn't send me the title commitment in time. We're no longer in contract. So that's why that's really important to make sure it's getting sent to those buyers 15 days prior. Now, occasionally there'll be situations, let's say it's shorter than, sometimes if it's cash, there might not be a 15-day window. In situations like that, you just need to be aware, have that conversation up front with the sellers that that's not going to be met, obviously, but typically you're going to have that 15 days prior to close that has to be produced.
And does the title company send that directly to the agent?
So the title company, it's going to depend on the title company and what you've asked them to do. Typically what the title company will be doing is they will send it to the selling agent, the listing agent. They'll say, here's the title commitment. If they've seen issues on it, they typically will say these issues are on here. Maybe there's an encumbrance, there's an encroachment, something like that. But then they'll either ask you, do you want us to send this on to the buyers, or would you like to send it yourself? Or, if you work with them regularly and you've said, I just want these automatically sent to the buyers, then that might be the case too. But typically they're going to be sending it to the listing agent and the sellers and saying, here's that title commitment that you needed. So it's something to be on the lookout for. On the buying side, when you have the buyers to kind of help keep things moving along, let's say you're getting to 18 days out from closing and you haven't seen that title commitment yet, it's something good to be on the lookout for and maybe reach out and just say, hey guys, we haven't seen this yet. Is it you know, did we get it? Is it not prepared yet? You know, just to keep everybody on track.
Celia, how often do you have agents that do the preliminary work? Because I always do prelim work before I even go on a listing appointment. I need to know if there's something there that we need to discuss. How many agents do agents do that often or no?
Not as many as I would like to, because for me personally, I think it's a really great tool to utilize. It really gets things set ahead of time. We have a handful of agents that every single time they have a listing, they always do that, just like you, Lisa, that they get it started on the front end. And we have one right now. She kind of knew something was going to be on there, but she didn't know what yet. It's not listed yet. They're holding off for that reason. They wanted to check things out. He has 3 different attorney general liens on the property, and it's taking them, you know, more than 15 days to even respond on things. So that one was a really good situation that she started it early, because now they can get those things cleared up, or at least know exactly how much it's going to cost to get those things cleared up. Because, you know, let's say the liens are $100,000 and he's only going to net 50,000. He has to bring $50,000 with him to close.
Yeah.
So if you know those things and how much in advance, it really can save the day, make a big difference. So I would always recommend doing it. Not as many people do it as I think should, though. So
do you have, I've never had anybody terminate a contract because of title commitment. Have you had that happen before?
I haven't had one terminated, but there's definitely been ones that the sellers ended up, they were going to have to bring money, and so they needed to extend the contract out. So I've seen that, you know, and then there've been ones where something, you know, because something came up as an encroachment, you know, it had to be kind of, okay, here's what we're going to need to do for that additional issue to be covered in the policy, and everybody had to agree to that.
Yeah.
So it could be, if, you know, if something's bad enough, there could be an issue that actually terminates the contract. Fortunately, we don't see a lot of that, just because I think we're at a point in society now where we've kind of gotten things a little more organized, but not too frequently.
Like the timing wise, like somebody
No, I haven't seen that yet. And actually, Lisa, this is a relatively newer clause in the contract there, that's saying how many days prior to closing you have to, I believe it used to be in there saying sellers required to provide this to the buyers, but I don't think it used to have a timeline specifically, so they could send it the day before and say, oh, here you go, you know. But I want to say it was in one of these last sets of revisions within the last maybe year and a half that clause was added for the specific timeline. But no, we haven't seen any of those so far where anybody's said, oh, timeline didn't work out. That's typically, in my opinion, more of they've kind of changed their mind already, and they were hoping to have something to get out. So
I was just curious to see if somebody had actually tried to do that, because I've not heard.
Haven't seen it yet, thankfully, and I'm hoping not to.
Okay.
Okay, so some of these other items, seller pre-sign. So for sellers, typically the information that's needed for the sellers is going to be ready a lot sooner than the buyers. With the sellers, the search on the property needs to be completed. If there's a mortgage, we need to have mortgage payoff. And then if there's a homeowners association, we need to have contacted them and have information back from them telling us how much the transfer and those things are. Once those items are done, the sellers can sign at any point. It does not have to be closing day. It does not have to be with the buyers. And some of that, even without having it quite yet, we could still do. Like, let's say we didn't have payoff yet, but they were going out of town or moving out of town. We could go ahead and sign them, and then they could get updated numbers via .loop. But some of those documents, there's the deed specifically does have to be signed in person because it's a notarized document. But they can sign ahead of time. I mean, I've had sellers sign 2 weeks ahead of time just because that's what worked for them timing wise. The buyers, if it's now, obviously this is gonna be when there's a lender involved. That's gonna be specifically to when the lender gives us the clear to close and is able to do so. If it's cash, we get this question a lot of times, how quickly can cash closings close? Especially in Franklin and Delaware counties, those are pretty easy to get the information from for the search. That's really just going to be as quickly as we can get the search and the payoff back for the sellers. Because on the buyer's end, there's really nothing that has to be done as far as, you know, timing, as long as they have the funds available. So I've done those in 5 days, you know. That's a lot of fun, but those can be done pretty quickly.
As soon as I've heard it's a week, I was like, wow.
Yep, we've done a few that way. I would say 2 weeks is ideal because it, it makes things a little easier. But yeah, I mean, we've done them that way before, and it's, that's why cash is lovely because you can just, scoot right through.
Can you go to someone's home also if they're medically compromised in some way?
Yes.
Okay.
And right now, a lot of those answers are a lot more convoluted because of COVID. But yes, that's never a problem. Right now, I mean, a lot of times we're, go to the home and do it outside of the home or something like that. We're not requiring people to come in. There's an issue right now with, people in facilities. A lot of the facilities aren't letting notaries in. So that has to be a sort of worked through situation as well. But in those situations, even as long as the notary can physically see the person, doesn't even have to be in the same room with them, then that would be okay as well. I just had one of those last week where we had to kind of watch through a window to watch them sign it. Okay, so then commission checks and seller's proceeds, those two items are going to be around the same time that they're available. So those items are going to be available when everybody's finished signing and the lender has given funding approval. So if there's lender involved, if it's cash, that's right away as soon as everybody's done signing. If there's a lender involved, some lenders would like to see the documents that the buyer signed and just make sure they're happy with how everything's signed and everything looks correct to them. And then they'll say, okay, go ahead and you can release funds. So at that point, we'll hand out checks to realtors, or we've actually started wiring a lot of commissions. And then sellers can choose how they want to receive their funds, whether it's in a check or a wire.
Did you say you're starting to wire commissions?
Yes, ma'am, we are.
Oh,
So
really?
we wire it directly to your brokerage, and then we just email the settlement statement over. So
you wire it into the account that they pay commissions out of?
Yep. So the MCA gave us a wiring information, routing and account number, and then we send it directly to them, just let them know how much it is and what it's for, and then send the settlement statement over to them.
That's amazing.
Yeah, well, and COVID was why we started doing that. But honestly, it's like, I kind of wish we'd been doing it ahead of time because
it makes all the sense in the world.
Yeah, and it's making things a lot easier for people, especially if they can't come to closing or, aren't going back to their brokerage after, or, something like that.
So is the wire fee, who pays that fee?
We don't charge a fee to send that out for commissions.
Does the bank charge a fee for receiving or sending?
I don't believe so, because I double checked with your brokerage when we were setting everything up. I don't think there's any fee involved. We probably pay a fee to our Chase to send the wire, but I don't think yours charges to receive it.
Okay, that's what I meant.
I got disconnected for a second. I'm sorry. What were you just talking about?
No, you're okay. Where did we lose you?
You were talking about commissions. Like I got to the buyer signing and then commissions. Okay. You said something about wiring and I didn't.
Yep, Lisa and I were just talking about wiring commissions. So we were saying that for the commission and the seller's funds, once everybody has finished signing, and then if there's a lender involved, once the lender has given approval for funding, at that point, because sometimes they want to see some of the documents and make sure they're signed correctly or how they would like them to be signed. At that point, then we go ahead and give out commissions and give funds to the sellers, whether that's in a check or a wire. So we were just going through how we're doing commissions right now. We are actually wiring it directly to consultants. So we wire it to them, and then we send something to the MCA saying this wire for this property and this agent just came into you, and then we email the settlement statement over.
Okay.
So just trying to make things a little easier, especially in these crazy times.
Kidding.
But I think we'll continue doing that because it's worked out well and everybody has really liked it. So
that's awesome.
Yeah, I think so. And then again, so the sellers can choose if they want to just get a paper check, that's perfectly fine. There's a variety of ways to get that to them if they're not at closing, or we can wire directly into an account with it in their name. All right. And one other note on that for the sellers, it does have to be the names of anyone in title. So let's say there's a husband and wife in title, the account would need to be in both names, or let's say it's an LLC or a trust, the account does need to be in the name of whoever's in title. Okay, any questions? All right. Okay, so this is, I just kind of wanted to go through just a little bit of the escrow process. That's what we're doing on our side, just so you kind of have an idea. You know, obviously we're all working on different ends of the deal, and it's just sometimes nice to kind of know what to expect. So from the escrow process, so property
Celia,
goes.
I'm sorry to interrupt you.
Nope.
Can you go back one slide? What did you say about, were you talking about dower?
Oh, I haven't gotten to that one yet.
Okay, you said something about husband and wife, something.
Yep. So whoever's on title is who the checks need to be, or the funds need to be written out to.
Okay, all right.
Yeah, so let's say it's husband and wife in title. Both of the names would be on the check or on the money, the account that it's being wired to.
Yeah.
The reason for that is both people are owed that money.
Yeah.
And if it just gets sent to one, there's legal issues there.
So what if there is no joint account?
So the other option, if there's no joint account, they can get a check written out to both their names, and then they can sign it and deposit it. The other option, we actually don't have that problem very often. Typically they'll say, oh yeah, it is in both of our names. Sometimes, depending on the title company, if they sign something saying we're okay with it going into this account, then sometimes that'll be okay too.
Okay.
I'm actually pushing for that because we have a document that's notarized and says this is where I want the money to go. So I'm actually pushing for that, to, instead of both names having to be on the account, just having a notarized document.
Yeah.
So I'm in the works with that right now.
Yeah, and per the court orders, like for divorces and things like that, or when the funds need to be split up, you just go by what the court order says, right?
Yep, exactly. Whatever the divorce decree says.
Mhm.
And then typically in those situations, what the title company will do, they'll show it on the settlement statement as listed out. Let's say the wife's getting 50 and the husband's getting 50%, or
Yeah.
however that's 70-30, whatever it's ended
Yeah.
up being. They can show it on the settlement statement of how much is going to each person, and then the net amount would be zero technically, even though it's not. And then each person can provide a separate check or a separate account for that money.
Okay.
Yep. Okay, so just into the escrow process and just what we're doing on our end. So the order gets received, and that's going to be typically the contract. You send a contract over. The office sets up a file for that number. So it's a file number, and then it's by property. So obviously we can always look it up by name, but just so you know how title companies typically do it. Lenders typically go by buyer's last name. Title companies go by property. So the order received, set up the file, get the contact information from both realtors, and then start reaching out to everybody. So reaching out to buyers, sellers, lender, if there's an attorney involved, anybody along those lines. If we didn't already start the search, which, like I mentioned, that's that pre-start, which I recommend doing. At that time, we would go ahead and order the search. We would order the survey if there's a survey needed. We would get payoff information, which is we would need information from the sellers in order to get that payoff information, but get that information. And then buyers would go ahead and set up their homeowners insurance. That's going to be called hazard insurance on any of the mortgage statements. Collecting any invoices. So if there's a home warranty, the realtor would send that on over to the title company. That gets paid out of the proceeds at closing. So they don't have to pay that ahead of time. Any other invoices, let's say there's a repair to the window or some flooring being done, something like that, that all can be sent to the title company as well and paid out of closing, and instead of the sellers having to come up with that money ahead of time. So we send all of that over. The settlement statements are getting prepared. So what we're doing is the title company is working with the lender and balancing numbers on both sides to make sure they match up with any of their fees, any of our fees, and any of the collective numbers that we've come up with for payoff and things like that.
Do you need all
Closing
the
packet.
addendums from the contract? Like when we write a contract and then there's addendums after that, do you need all those?
We need those, yes, just because a lot of times those change something that would be involved with either the closing date or the funds. If it's something like, buyer agrees or seller agrees to leave the refrigerator, then we don't need that. But anything that affects closing date or funds, or if there's going to be a check left or anything like that, we do need to see those, just because it could change any of that. Obviously, price point, we definitely need that one. So So yep, those, and you can always just send all of those over and we can pick through and find the ones we actually need. So yep, so then the agent sends, or sorry, the lender sends over their closing package. We start getting everything together and then they give us a clear to close. We get everybody scheduled for whatever dates and times work for them, do the closing. And then again, so for you guys as the realtor, it's completely up to you if you want to attend closing. Actually, I think I'm jumping ahead of myself. Do I have to go to closing with my customer? But that's up to you guys if you want to go. It depends on the comfortability between you and your buyers or sellers. You never required to be there. We don't have to have you there. It's just, that's completely up to you guys and your relationship with your customer. If you're not going to be there and you have the buyer and there's earnest money involved, you just need to make sure you get that to the title company prior to closing. We then, at that point, we disperse everything. So what we do is we collect all the money and then we disperse it out where it goes. So we pay off the prior mortgage, we cut any checks to any of the invoices, we cut the checks for both the realtors, and then we pay the sellers whatever's left for their portion. And then after closing, the final deed, once it's been recorded and returned from the recorder's office, and that final title insurance policy that gets written, those will both come in the mail to the buyer after closing. Seller and buyer and seller, what they can expect at closing table, it's just going to be the title, the closer going through those documents, explaining them to them what they are, and just signing whatever needs to be signed. They do need to make sure they bring an ID with them. Any questions? I'm going to skip this one. We actually already covered that one. I'm going to have to move the order on it though for future. All right, this slide is just some of the things that you can expect to see on settlement statements, regardless of what title company you're working with. Because I get these questions a lot where somebody says, does this charge look like something that's a legitimate charge, or is this just an extra fee or something like that? So, so I have a list of your typical charges that you'll see on those closing statements. Your settlement statement, or sorry, your settlement or closing, it could be called either. There's typically a fee for that. The title commitment is also called the title binder, and that's that commitment that you do need to get to from the sellers to the buyers prior to closing. The courier or the shipping fee, that's going to be for any of the packets that have to go either to the lender, to the county, to prior mortgage holders for payoff, things like that. Wiring, wire processing fee, any of those that might be involved if there's wiring. The title search is also called the exam at other companies. The title update fee, that's going to be, we do the search up front and then there's an update the day prior just to make sure there's nothing new that was added to there wasn't a new lien or anything added to that property. Closing protection coverage, and I'll go over that in just a second once we finish these. The deed preparation fee, the recording and recording service fees. Now recording is going to be a fee that goes directly to the county and it's a per page fee. So let's say the deed is 2 pages. They're going to charge you for those 2 pages, and then the mortgage is 16 pages. There's going to be then a second separate fee for those pages as well. They charge $34 for the first 2 pages and then $8 per page after. So recording can get a little bit costly. And then the transfer tax or conveyance, that is a fee that goes directly to the county. It is a per thousand fee. So Franklin County is $3 per thousand or part thereof of the sale price. So if you have a $100,000 home, it's going to be $300 in conveyance charge. And then I said I'd pop back to the closing protection coverage. Are you guys familiar with closing protection coverage or what it is? Lisa, you're shaking your head yes. Jamie, you're saying no. Okay. So closing protection coverage, several years ago, there was a title company lender married couple that were essentially just stealing money from people. They weren't recording the new deeds. They weren't paying off old mortgages. They just were collecting people's money and then not doing what they were supposed to do. They went to jail, which is good. Closing protection coverage was put in place after that to protect the buyers and sellers from us, the title agent. So now we, the title agent, everywhere across Ohio, all of us, it's not any just one specific company. We all are required to offer this closing protection coverage policy. It would protect the buyers or sellers from us, the title agent, if we were to steal their money. You'll see it anytime there's a lender involved. It's required, the lender requires the buyer to buy it for them, for their coverage, for the lender's coverage. Then the buyer has the option to purchase their own policy. The seller has an option to purchase their own policy. It's not required, they don't have to do it, it just has to be offered to them. You shouldn't be recommending to your buyers or sellers whether or not they should get it. You should just be explaining to them what it is, and if they have additional questions, have them call the title company. But that's something you don't really want to be saying, no, you don't need that. And, you know, let's say you're working with a title company somewhere that ends up actually stealing their money, they would come back at you. So, okay. And then county taxes.
Wait,
All right.
Julia.
Yep.
Closing protection coverage. Now, the way that I understand it is you pay, who's the money go to?
The money goes directly to the underwriter.
To the
So,
underwriter.
yep. So what it would do is the underwriter. So here's the thing I would recommend, if they ever want to purchase it, buyer or seller ever wants to purchase it, I recommend they purchase it on the front end, because what every title company should be doing is sending that option to them when they first start working with the buyer or seller. It shouldn't be at closing after they already have everybody's money. A lot of times we are having them sign it at closing because it was sent to them and never, either wasn't understood or just got missed and wasn't signed. But if they do want to purchase it, purchasing it in the beginning of the process is the best time, because at that point, they can just write a check out to whoever the underwriter is, and it doesn't ever even have to technically go through the hands of the title agent.
Yeah, so that's my thing. So if I'm a unscrupulous title company and I want to steal people's money, and I'm writing a check out to the underwriter, right? Through the title company, how do I know that that money is getting sent to the underwriter?
So what I would recommend is they write a check and they write it out to the underwriter, because if they do it on their settlement statement, the title company is collecting that money and then sending it back out. But in order to ensure that the title company isn't actually getting it, they would write the check out actually to the underwriter. So for Title Connect, if you wanted to purchase it, you would write your check out to Old Republic Title, not Title Connect Agency.
Yeah, so how do
I mean?
But yeah, I get that. But again, like if you're doing it at closing and you're writing that check, how do I know?
So if you're doing it at closing, I would tell them you want the policy right then and there, because they can submit it online. They submit it online to the title or to the underwriter, literally right there while you're sitting there. I would say, yes, go submit it and bring me the policy back, because then they could print the policy out right then and there and hand it to them. So if they're doing it at closing, I would say, we're going to write it out to the underwriter, but we want the policy now. Does that make sense?
Yeah. Yeah, I always wondered about that. Like, how does this really work?
So, so yes, I mean, it's kind of a little bit silly if you think about it, because since I'm not mailing it directly to Old Republic, I'm essentially entrusting you to get it to them. That's why I would say ask for the policy right then and there and write the check out to the underwriter, not to the title company. Whereas if it's on the settlement statement coming out of proceeds, it'll say it's written out to Old Republic, but there's really no way of them actually knowing that.
Is there a way for us as agents to be able to purchase that for the buyer?
You probably could. I would imagine that if that's something you wanted to do, that you could do that. I don't know that answer, but I can find out for you.
Yeah, I think that's, because some title companies, I'm just like, who are you? And I don't, because I don't control it on that side.
Right. And I would say any of the bigger reputable companies in town, there's really no issue. But like you said, sometimes when it's kind of a one-off smaller one, it's not even necessarily that you're saying, I don't trust you, but it might be that I don't know you and I don't know how good of work you do. What if you mistakenly, as silly as that sounds, mistakenly, steal some of my money?
Yeah.
So that's not a bad question. I will find out for that.
Okay. Thank you.
Also, I'll find out if there's just like a mail-in option, because that would also be a good, possibility for them to do where it avoids the title company.
Yeah.
Okay. I'm going to ask this because I don't want to bore people if they know. Do you guys know, I think you do, Lisa, but do you know how the county taxes work and how they're paid in arrears? Lisa's shaking her head. Barbara, are you familiar with that?
Yes.
Okay. And is there anybody else on here? I've got a couple other people on here. I'm just going to go through it quickly as to not keep you guys on here. And if anybody has a question, just let me know. But county taxes are paid in arrears. So when you make a payment in 2020, you are making a payment for taxes that were accrued in 2019. So when a seller sells their property, they give money to the buyer for when they owned the property, and then the buyer pays that when it's due. So anytime you have a seller, unless there's some different agreement or something weird going on, the seller is going to credit money to the buyer for county taxes of the prior year up through to closing. And again, I'm happy to elaborate more on that if anybody has any questions, but I just don't want to hold up, you know, people who already understand it. Okay, so buyers getting the funds to the closing or to the title company for the closing. There's a new, well, relatively new law state of Ohio put into a place that anything $10,000 and more cannot be in the form of a check. So if you have $10,001 you're bringing to closing, it has to be in a wire. And that is including separate checks. So you can't bring one for 5,000 and one for 5,001. It's the collective amount. It would have to be a wire. If it's 9,999, they can bring a check to closing. Wire fraud, that's obviously been very prevalent. So that's just something, always remind your customers the wiring instructions will not change. And if they get something from somebody saying the wiring instructions have changed, they should stop immediately, call the title company with the initial phone number they were given, not a phone number listed in that email. Don't take any of that information in email. And in addition to that, you as the realtor, don't ever forward on title, or don't ever forward on wiring instructions. So if you get something from the title company saying, our instructions changed, can you forward these on? Or even just, here are our instructions, please forward these on. Don't do that. Just tell them, nope, you need to send it directly to my buyer. I don't want to be in the middle of that, just because that puts you at risk. Yes, please.
I had a situation where, and so I put it into my procedures where I've started asking for the wiring instructions. Because I had a title company that did not send them to the buyer.
Okay.
So in that instance, I had, you know, I want to, I'm the type of realtor that if something happens, I make a procedure.
You want to be prepared. I understand.
Yeah.
No, I understand. You asking for it and having it, I don't think is necessarily bad because you're initiating that. Someone sending you something and saying, here, send this to your buyers, I wouldn't do. Yeah, okay. But you having it, and you know, I mean, I don't think that's necessarily a bad thing to have ahead of time, because you could get it from that one title company and use it from here moving forward, and it's never going to change. Yeah. You know, if a title company ever did change their wiring instructions, it would be made very publicly obvious, and they would be like, hey, just so everybody is aware, don't use old, you know, that sort of thing. But but I think you're probably okay doing that, Lisa, but definitely don't just forward anything on. Gotcha. Just be careful with anything that's involving their money, you know, just because that's, you know, how quickly that can turn weird. So
I just, you know, that one time that the title company
you like to be prepared, and that's good.
And like, wow. Okay.
Yep, but just be careful with that. I think we already talked a little bit about the seller proceeds and how they receive those. I get ahead of myself sometimes. Sorry about that. Dower, we've touched on that a little bit, but Ohio is one of, I think, 6 states left that have dower rules. So that just means that if someone is married, the spouse does have to sign off. The only exceptions to this are going to be if it's like a trust or an LLC. The spouse doesn't have to then, unless they're in the trust of the LLC. But if it's anything that's in a personal warranty deed there, they would have to be there or have to sign off as well. So what that means is you buy a house 10 years ago, you get married today, and you sell your house tomorrow, your spouse has to sign off on the title. That's just because that's Ohio's law.
Can you elaborate on the trust issue? Like, if it's in a trust?
Yep. So that if it's in a trust, the trustee would be who's signing, but if the trustee is married, that additional person would not have to. Same thing with an LLC. So let's say it's in an LLC, the member of the LLC is married. That spouse doesn't have to sign just because that LLC member is married, because that's a different type of ownership.
So if the house is in, so I just had this conversation. That's why I'm like, this is really
Yep, you're
intriguing. So I, Lisa Evelyn, buy a house, right?
Yep.
And then 6 months later, I transfer it into the name of an LLC.
Yes.
If I get married in that time frame, my husband has no rights to this house.
After it's been transferred to the LLC.
Correct?
Correct. Yep, correct.
And same thing if I am Lisa Evelyn and I am one of the, either I'm the executor or I am the creator or the owner of a trust or I am a member of the trust.
Yep.
If a house exists inside of the trust,
Correct.
and one of the members, and like, let's say that house gets split 3 ways, right? The members of that trust, the spouses of those members of the trust have no rights as well, correct?
Correct. Yep. So that's one of the reasons that a lot of people put properties in LLCs and trusts. It's to kind of protect it from outside others, essentially. So the trust, a lot of families do that because they want to ensure they can control exactly where that property goes after they pass or after they've, moved it along. Parents will do that a lot of times because they might want their children to get it, but don't necessarily want the wife of the child, that sort of thing. So
yes. Okay. One more question about trust.
Yep.
So if you have 123 Main Street that Lisa Evelyn owns, and I want to put that into XYZ trust, right? So the trust is actually the owner of the house. Now I can transfer that deed over into the name of the trust.
Correct.
Okay. Can you put a property that is a part of the LLC that's transferred into an LLC and then put the LLC inside of the trust?
I don't know that answer.
Okay.
You're really trying to get it ironclad. I like it.
I think you can because you can put a business, because my LLC is inside of my family's trust.
Okay.
Right. And so the executor knows how to handle the business assets if I were to pass away.
Yep. That sounds reasonable.
Is there any,
I don't.
So is that like double protection of having it in an LLC and then also having the LLC and all of its assets in the trust?
That would be my understanding of that, yes, because then it would be only the LLC's members that have to sign, as well as then only the trustees that have to sign. So that would be my understanding, but I don't know that answer, but I can get it for you.
Yeah, Maria would know that, right?
Yep.
Yeah.
Yep.
I'm curious.
Yeah. We'll find out for you.
Okay.
A simple dower release is all you need to relinquish the spouse's interest?
Yep. So typically the way that would be handled, let's say you purchased the home and then you get married after you've already owned the home. You go to sell the home. The only thing that spouse has to sign is the deed, because it would say, the deed would have been in your name, and it would say, then when you go to sell, it would say as a married woman, and then you would sign, and then the spouse would sign as well.
Okay, here's one where married at the time, but the husband signed a dower release.
Okay.
Probably 10 or 12 years ago. When I go to sell that house, which is in my name only now, do I still need to do something else with him?
Are you still married?
No.
Okay, so if he released at the time, then no.
If we're married, do we still have to do something else?
If you were married, then at the time of, or if you're still currently married, then they would just sign that at closing.
But they're not on the deed and the dower release already exists, but they still have to sign?
Probably. The dower, so when you say they released the dower, what do you mean though by that?
At the time that I established the trust.
Okay.
The dower
if it's in a trust, then he wouldn't have to sign unless he's a trustee of the trust.
But in order to sell the house, you have to move it out of the trust and into an individual's name. So
no, you don't have to. A trust can sell a property.
When I was the executor of my dad's estate, the property was in the trust, but they moved it to my name, which made me nervous, and then sold it.
That was probably because of you being the executor, not the actual trustee, would be my guess. I can look into that. Is this Marcia?
Yes.
Okay, I can look into that for you some more too, Marcia. So there are a lot of title nuances, little things, especially when you get into trusts and LLCs that a lot of times, and each trust might be written differently. So most trusts won't let there be a power of attorney. So let's say there's 2 trustees and one of them becomes incapacitated, he can't sign a power of attorney for that to be used because the trust might say he can't. So I actually had that situation recently. So the trusts will have nuances of what can and can't be done at transfer as well. So
and also, because I'm older, the bit about the power of attorney, even though the power of attorney predates the becoming incapacitation.
Well, it would just depend on the trust if the trust says he can't. So I've seen trusts where a power of attorney can be utilized, but most trusts do not allow power of attorney to be utilized. So it would just depend on that power of attorney, or sorry, on that trust. If the trust allows it and it's predating his incapacitation, then that would be perfectly fine.
So basically what I'm hearing, because most of the people that I deal with have trusts or is to tell them to see their attorney, right?
They need to look at their trust documents and see if it allows a power of attorney or not.
Okay.
Yeah. Yeah.
Yeah.
The hard part about that, so the hard part with trusts is they're put in place to protect the person that is giving power of attorney, or the trusts are meant to protect the person that's in the trust. So unfortunately, it sometimes protects against themselves as well. I had a gentleman recently that was in the nursing facility, was not doing well. He and his wife had this conversation, knew he was selling the property. By the time closing came and, we went to do the signing, he wasn't able to sign, and his trust did not allow a power of attorney. So we had to, we had to have that conversation with them. He ended up being able to sign the following day. But it was sort of one of those situations that it's like, unfortunately your trust is there to protect you, but it's also protecting against this situation where if you can't sign, they don't want someone else signing for you. So it's a little bit of, sometimes it's good and sometimes it's scary, but every trust is a little bit different. You just need to make sure you're looking at what the trust documents say.
Okay.
Okay. Okay, so we talked about that. And then as far as do both spouses have to be present, nobody ever has to be there at the exact same time. They just, if both have to sign, then both would have to make arrangements for signatures. There have been plenty of situations where one spouse is here and one's in a different state. We just send documents to that other spouse and have them sign as well. It doesn't have to be on the exact same day, that sort of thing. So it's a little tougher with buyers because a lot of times when there's a lender involved, mailing documents away and getting them back, it might just delay when the funds are received by the seller. But again, not a problem to do out of state, that sort of thing. You just have to be cognizant of time and when things are going to fund. I think that's it. This one's just a little reminder of just be careful if you're working with a title company and they're offering to pay for too much. It seems like it's too good to be true. Just something to be aware of, because there are regulations for how much they can pay. Just make sure that they're not, putting themselves and you at risk, because if they do get audited, and it shows who all they were working with, then you could be at risk. So just be aware of it. I mean, most of the title companies in town do a pretty good job and they're staying above water, but just something to be aware of. And I think that is it. My contact information there. If anybody has questions, comments, snide remarks, anything like that. But is there anything that I didn't go over that anybody has a specific question about, or anything you want me to clarify?
I just want to have a conversation with Maria about the trusts and LLCs, okay. And if it's necessary. You want me to have her give you a call? Like yeah. Or you can get back to me. It doesn't matter. Okay. Anybody.
All right, will do.
Thank you, honey.
All right. Well, thank you guys all for hopping on. I'm sorry, what'd you say?
If I would want to use Title Connect, do I call you? Is there a loan officer I need to contact, or?
You can call me.
Okay.
Yep, I'm the director of business development, which technically is, yes, essentially I'm the salesperson, but I had helped open Title Connect, so I've been there from inception. I am very active in the day-to-day, everything we do. I have lots of people that just send everything to me, and then I forward it on to whomever I need to get it to, and then work through that process. So
great.
You can always reach out to me with anything you need, or if you ever want to work with us, I can definitely get that.
Okay, great.
So
Thanks, Celia.
thank you guys all so much, and everybody have a great rest of your day.
Thanks,
Thanks,
Julia.
Guys.
Bye.